This week, Ben and I are going to break down the Fed's decision, likely lowering basis points in their upcoming meeting on Wednesday, along with a preview of USDA's supply and demand estimates. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, as always, joined by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing great. How are you this afternoon, Will?
Enjoying my Monday. We got a couch finally. My fiance and I, we have an apartment in Austin, and we finally got our couch. We've been here for like 6 weeks, couchless, but we finally got a couch. So it's a
Well,
very big
congratulations.
Monday. Thank you.
Yeah,
Yeah,
congratulations.
big moves on the day. Talking about big moves. We're recording this on Monday afternoon ahead of the election on Tuesday. So we're recording just a little bit earlier than normal, but it doesn't really adjust much because we're after the close on Monday. So, Ben, I'm going to go ahead and give a rundown on the price changes for the week. Looking at that December corn contract up 6 cents at 416, December 25 contract up 1 cent at 440. That January soybeans contract for 2024 up 11 cents at 997. November 25 soybeans up 14 cents at 1035. Soybean oil on a cents per pound basis up 2.87 cents per pound at 45.56. Soybean meal by the short ton down $5.20 at 299.60. That 2024 wheat crop for December up 10 cents at 568. That December cotton crop down 0.46 cents a pound at 69.9 cents. And then that West Texas Intermediate Crude Oil, ugh, I can never say that one right. West Texas Intermediate Crude Oil contract up $4.27 a barrel at 71.72. So Ben, a lot of adjustments upward on the week. What's your overall takeaway looking at the picture?
Well, West Texas Intermediate Crude Oil is a mouthful, so no hard feelings there. No, a lot of moves on the week. Most of these actually came in the overnight trade coming out of the weekend, is where we saw a lot of the positive moves that we saw in the weekly changes here. It was pretty flat actually to end the day on Friday. So a couple of things have helped with that. The dollar has broke a little bit lower. That's potentially spurred a little bit more interest from the international market due to exchange rates. Um, but I think in general, a lot of commodities just trying to, get into a more neutral position ahead of a couple of big reports coming out. They're just big days. I shouldn't even say report. It's just a big week. Let's call it what it is here. It's a big week. So.
And it's somewhat refreshing. I feel like over the last 3 weeks or so, we've been largely talking about how little news that's really been moving the market, a lot of sideways trading, and even if not sideways, equal up and down movement. So, Ben, on the things we have coming up this week, obviously election Tuesday, but outside of that, the Fed starting there, they have a potential lowering of interest rates coming up later on this week. What are your expectations? How impactful might this be? And is it a sure thing to happen, I guess, first off?
Yeah, so the Fed will meet Tuesday and Wednesday of this week, the 5th and 6th. They'll have their announcement just shortly afternoon on the 6th, Wednesday afternoon. My expectation is the Fed does go ahead and cut interest rates 25 basis points. That puts that short-term borrowing rate somewhere between 4.5 and 4.75%. The market is pretty much fully banking that in, pretty much 100% expectations of a 25% basis point cut. Couple of things I think lead me to believe that that's where we're heading on that is we do continue to see a little bit of softness in the jobs numbers for the U.S. economy. For the month of October, the U.S. economy created just 12,000 jobs. That was it. That was well below expectations of 125,000 jobs. The private sector actually saw a contraction of 28,000 jobs.
Mhm.
So it definitely continues to be that we're seeing a little bit more weakening in that labor sector. The reverse of that though was when we got um, I guess the unemployment numbers. The unemployment stayed the same at 4.1%. We saw job quits also fall, signaling that people are staying in their jobs. They're not quitting their job to go take other jobs. So again, all these things kind of just, I think, signal that the labor market is not fully collapsing, but it's certainly weakening, and the Federal Reserve has I guess pivoted away from fighting inflation to making sure to shore up that job market.
Just kind of staying on that tightrope, I guess, of trying to balance both sides of that. But Ben, other reports and other things you hinted at that we have coming up, USDA's updated supply and demand estimates. There's kind of a shifting picture on two of the major commodities, looking at corn and soybeans. Some of the content that you've talked about is a higher level of corn exports, maybe. How strong of an export picture do you think that is coming out of the lull that we saw from the corn side to really move the picture maybe on U.S. corn?
I've been getting a lot of emails about corn exports lately. Some of it people are curious, some of it are people just wanting to press me on some of the things I've said. So those are always fun emails, and I say that tongue in cheek. Please, by all means, send me your thoughts. It's always good to hear thoughts, even if sometimes I don't agree with them. But so let me just set the stage of where we're at. So we have seen large sales by Mexico that continued last week. Of the 900, or excuse me, 92.2 million bushels of corn sales last week. Unknown destinations was the largest part of that. Mexico was close behind, plus Japan and Colombia. Our traditional markets for corn exports, we expected those markets to be big for us in the 2024-2025 marketing year. Why? Because we have corn to sell, right? And that's the key here is we have a lot of product, and so our expectation was that we would ship a lot of corn. It's hard to get overly excited. Well, I mean, it is exciting. Let me back up. It is exciting to see that these sales are actually materializing. That's supportive to the broader market. But to those people that are asking, why is corn price not rallying higher? Well, these were expected sales in a lot of ways. Where we're going to be surprised is if we see China come into the market or some other countries that typically don't buy from us, they start buying. That's when the market, I think, will get really excited on the corn side. To your point about the WASDE coming up on Friday, I do think that corn exports is one area where USDA could revise. So especially on that 2024-25 corn export number, they increased that 25 million bushels in the October report. I think they could increase it another 25 to 50 million bushels here in November. That'll just tighten those ending stocks a little bit. Probably, maybe see a little bit of a tick up in prices, but we could also see prices remain the same. So on the corn side, that's where I anticipate
Yeah.
seeing a change.
Well, it's interesting seeing the longer year-over-year changes on the focus of the market. Historically, China obviously major buyer, but the U.S. market has seen, as China has maybe moved away from the U.S. has been trying to spur maybe other avenues to really gain some of the traction elsewhere. But turning over into the soybean picture, Ben, on some of the things that you've hinted at, maybe looking at a continue to see depressed soybean prices, maybe a continued slide downward. What's really signaling to you that that's probably the case coming up in the near future?
Yeah, so a couple of things here on the soybean side as it relates to the WASDE report. I'll be very interested to see if they make a change to the national soybean yield. I Corn, we have a pretty good idea. I don't think they're going to change corn. They'll wait till the January report that's closer to final to make many changes there. Soybean number, it could go either way. And I could make a case for the soybean yield number to increase. It's at a record already, and I could see it getting a little bit stronger. I can also see it getting smaller, given some of the things that you and I have talked about in terms of just the dryness that we've seen at the end of the season, all the loss at harvest due to head shattering. And so like there's certainly, I guess, cases on both sides of this. So I'll be very interested on that. And then again, on the export side for soybeans, that's where I'm going to be focusing a lot is what happens with our soybean export numbers right now. We're well below the pace needed, 73 million bushels below the pace needed to hit our current export target. There's time to make that up, but our window is shrinking, and it's not going to be that long before a very large South American, specifically Brazilian soybean crop comes online. Most of the estimates coming out about the South American, or excuse me, the Brazilian soybean crop are between 164 and 169 million metric tons. That's up from the 153 that they produced last year. So a big crop coming out of South America, potentially, shrinking our export window.
All right, Ben, before we wind down, are there any expectations within the upcoming WASI report on maybe the crops outside of the big two in the Midwest, outside of corn and soybeans? Any surprises that we should be watching for?
Well, so I think USDA is still trying to get a handle on the cotton crop after the hurricanes came through. We saw cotton yields deteriorate, specifically in that southeast region. We could see a little bit of rebound or even further deterioration. Again, that's another one of those yield numbers that could go either way. Uh, it's also I would say that we've got some other bearish fundamentals in some of those commodities. Cotton on the trade side, we're behind pace on cotton, so we could see USDA lower the export target for cotton. Again, if they increase the yield and lower the exports, that's a double whammy to
Mm,
increasing ending stocks. And so there's some things to watch out for. It's November is typically not the biggest surprise of them. It's one of our
mhm,
more mundane reports because um, we're too early in the South American growing season. We largely have a decent idea, but there's a couple of things this year where I think yields will be, potentially, revised on the
mm.
U.S. side. So we'll have to see. I'm probably not giving you what you want.
No, no. I mean, at times, sometimes it depends, and wait and see are the best answers that are available
I
to
don't
us.
think it's going to be a huge market
No,
mover
yeah,
of a report. Let me just
yeah.
put it that way. That's kind of
So
my.
that'll come later. We'll get back to that in the coming months. But Ben, looking forward into the rest of this week, what should farmers and ranchers really be paying attention to that could move the markets?
Yeah, so we've talked about a couple of the big reports. Wednesday afternoon, yes, we do have that Federal Reserve interest rate decisions. At 1:30 is the press conference Central Time. Friday, we get those USDA reports, cotton production, or Cotton Jennings crop production reports. Reminder that next Monday is a holiday. We do not have USDA reports next Monday, November 11th, due to Veterans Day, but the markets are open. The markets do trade on Veterans Day. So US reports will be delayed a day next week, but the markets will be open on Monday.
All right. Always a pleasure to have your knowledge and information on the program. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.